This rabbit hole is the story of how the global financial system is being quietly replaced. Not destroyed, not revolutionized, but rebuilt from the inside out, using layers of technology, regulation, and psychology to reshape how money moves, who gets access to it, and what rules govern its use. At the center of this shift is a new kind of money. Programmable, trackable, real-time, and digital. Not just digital like a debit card, but digital like a smart contract, like a token that knows who owns it, what it's allowed to do, and where it's allowed to go. This isn't just about Bitcoin or Ethereum. It's about systems like Ripple, Stellar, Chainlink, Axelar, Shinfin, and many more assets, and how the institutions are quietly embedding them into the plumbing of finance without ever saying their names on TV. What's happening now is that the old system, which is based on delayed settlement, national currencies, correspondent banking, and paper-based trust, is being slowly phased out. In its place is a system that's interoperable across borders, integrated with identity systems, and capable of real-time compliance. This means every transaction can carry embedded metadata, trust scores, and policy logic. The money of the future doesn't just move, it listens, reports, and obeys. Ripple plays a foundational role here, not just because of XRP, but because RippleNet and RLUSD are acting as the liquidity bridges between the old world banks and the new programmable systems. Sygnum and LCX are helping tokenize assets like stocks, bonds, and real estate so they can be traded, borrowed against, or held in programmable wallets. CME and Hidden Road handle the deep liquidity and risk management behind the scenes, ensuring institutional players can operate with size and confidence. Bitstamp brings regulatory compliant crypto infrastructure, and Robinhood sells access to the retail crowd in a way that's gamified, data-rich, and highly manipulable. Citadel sits above all this, analyzing the flow, setting the tone, and profiting from the behavioral patterns of a public that still thinks they're just trading. Together, these players are creating a new financial operating system infrastructure. It's all the boring back-end stuff that no one paid attention to while retail was watching memes and speculating on coins. This new system is being rolled out in stages, often timed with crisis events, regulatory announcements, and carefully managed public sentiment shifts. When people are scared, they ask for safety. When they're tired, they accept convenience. That's when the solutions get deployed, solutions that were ready years ago, just waiting for the right problem. The rollout is being coordinated through ISO 20020 to messaging standards, real-time payment systems, centralized digital identity frameworks, and cross-border regulatory convergence. Basel III is not solely about capital reserves, as it is the final lock-in point for how value is defined and how liquidity must be backed. By January 2026, the rules change completely. This is known as the Endgame. Tokenized assets will become the norm. Stablecoins will be either regulated or shut out. Access to money will be based on identity, behavior, and jurisdiction. Retail investors are not being invited into the system, they are being herded toward it. Platforms like Robinhood and Bitstamp give them the illusion of access, while the real rails are being reserved for permissioned wallets, institutional actors, and tokenized instruments. The average person will still have money, but it will be money that expires. Money like subsidies, benefits, rebates, or emergency funding can be coded with conditions. Expiry is just one condition in a broader set of programmable rules. Programmable money can be empowering when it's used voluntarily, and when you control the contract, and if it's transparent. Nothing is either good or bad, but thinking makes it so. Hanlett, research partner. And while this transformation happens, the masses are distracted by inflation, elections, culture wars, and media noise. They won't see the rails shifting beneath their feet until the door closes behind them. And by then, the system will have already decided who gets access, who gets liquidity, and who gets left out. This rabbit hole is the furthest thing from a fantasy. What you're witnessing is the dawning of the blueprint, and it's happening in real time through coordinated tech deployment, regulatory harmonization, narrative management, and behavioral engineering. The new system is almost fully installed. It just hasn't been flipped on all the way yet. The people who understand this, who are already positioned in real assets, compliant rails, digital identity sovereignty, and tokenized yield, won't just survive the flip. They'll ride it like a current. Everyone else will be onboarded by force, through convenience or through crisis. So no, this isn't just about Ripple. It's not just about XRP. It's about an entire new global financial structure being quietly deployed while the world sleeps. And for those who see it early, the opportunity isn't just to profit, it's to choose whether you enter it as a customer or as an architect.